Hello, welcome back to my channel. This is Soji and welcome to Soji Forex. In this video, we'll be looking at Fibonacci retracement. Fibonacci retracement. It is not every trader that knows how to take advantage of the Fibonacci retracement. So today we'll be looking at what Fibonacci retracement is all about. What are the necessary settings that we need for our Fibonacci retracement? How do we know the level where a retracement has begun in the market? So we'll start by what Fibonacci is all about. Fibonacci is a name of a person who invented this particular method or strategy. It has been observed over time that at a particular level, the market tends to make a reversal, or it tends to move back, either an impulsive or a corrective move. And this level are being identified based on analysis and statistics, and are being compounded into level at a definite point. So that is all about the Fibonacci level. Okay, it helps you to identify a retracement point, but mind you, you cannot use the Fibonacci tool when you don't have idea of what the market structure is all about. You need an idea of what the market structure is all about in order for you to use the Fib level effectively. So if you don't know how to identify the structure of the market, please, you can do that by watching our previous video on market structure. So today we are looking at the Fibonacci retracement. At what level do we say the market is retracing or the market is pulling back? It is when we identified the reversal of the market from a structural point, then we say that the market is making a reversal. Okay, so looking at my chart, you will identify with me that this is an uptrend. Okay, what we are having on this chart is an uptrend. This is an uptrend because the market is making higher high and the higher low. And we see a market making a series of a higher high and a higher low. We say that the market is in an uptrend. It is a higher high and our market is making a higher high and the higher low, a higher low formation. This is a higher high we have a low, and then we have another higher high formation. So whenever we see the market making this formation of a higher high, higher low, higher high, higher low, then we have our structural point. Our structural points are very clear in such scenario. This is a structural point. Okay. We're having another structural point here. We're having another structural point here. Here we are trying to identify our structural point. Here is another structural point here. So when we have a series, all of these structural points, which some people call it a trend line, let's do it the other way around. After we have identified our other blocks, which we can join a line and call it our trend line, signifying that this market is in an uptrend. Okay, so after we have identified our structure, which is our higher high, higher low, higher high, higher low, at a point we see the market making a move. We see this market making a move from this higher low to a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and this higher high. Now, at a level, you observe that when the market moves from this low to make a high, and then come back to make a higher low here, in order to go back to move a higher high, what the Fibonacci tools does is that it helps us to identify the level where we are expecting this retracement from this level to this higher low to stop, and then move forward to create a new higher high. That is one of the advantages it does for us. It gives us a zone where we expect the end of this retracement. The same thing here, after the formation of this higher high, the Fibonacci tool help us to identify this pullback that is happening, and they help us to know that at this level there is a signal that this is the end of the retracement and we're about to make an entry for a creation of a higher high. Okay, that is number one. At the same time, another function that the Fibonacci helps us to know that a retracement has started. It is not every pullback that is a retracement. Okay, it helps us to know that a retracement has commenced. Also, the Fibonacci helps us to have a little stop loss. It helps us to have a very simple stop loss, okay, that will reduce our risk of a big stop loss with the help of it. And how does that happen? It helps us, like in an uptrend like this, it will help us to buy very low, close to our structural point. So our buying entry will be low at our structural point, and that will give us a very tight stop loss. So it helps us to buy low and sell high. All right, so now here we have identified our low. Let's put our Fibonacci tool and see how these things works. So we are putting our Fibonacci from week to week. Okay, the week is where the candle has no body. You see, at this point we have put it from that week to this other week, and then we see that the market from this low make a high, and then the market begins to pull back. It pull back until when it comes to the level of 61.8 of the Fibonacci level, the market begins to, it turns back and then make an impulsive move to the upside. Now, how do we identify, how do we know that we are already in a retracement? We can easily identify retracement when they pull back, when the market pulling back closes below the 23.6 level of the Fibonacci. It simply means there is a retracement. Okay, any move from this zero and then the market continues upward is not a retracement. Our retracement begins when the price closes below the 23.6 level of the Fibonacci. That is where the retracement starts. And then look at when the market comes to 61.8, if it retraces below the 50 zone, which is our discount level, if the retracement comes below the 50 zone of the Fibonacci, we begin to look for an entry for us to go long, that is for us to buy. And then we look for an entry. We don't just jump, but we wait for a signal. And like this place now, we can see this candlestick pattern. This candlestick formation gives us a signal from this level. And then if we enter the trade from this 61.8, our stop loss is going to be at 100. Our stop loss is going to be at 100, while our entry is at 61.8. Okay, at the close of that candlestick formation that is looking like a harami with a rejection from the downside. And then we see that the market plays out successfully as it was analyzed. And then when you look at this place now, the market is now pulling down. So we'll now shift our Fibonacci to a new low. Okay, trying to remove this to make it clearer now that we have identified our structure. So our structural point remains the mark we are having down here. That mark is for our structural point. Okay, so then we now move our Fibonacci to the new higher low that was created, and then we will draw for our Fibonacci. Remember, we said it is week to week, not body. If you want to fib it body, you do it from one body to the other body. But if you want to use the week, just as I am using, you do it week to week. Okay, from one week to the other one. It is as simple as that. So here is our fib now. So we have fib a new level, which is this new high. And then if you look at it critically, you will observe that the market moves from this zone. After this, it pulls back from this level of 23. When the market pulls down and closes below 23.6, we get to know that this is a valid retracement. And then you see that it also pulled back again to the level of 61.8 of the Fibonacci. And then look at what it gives us. It gives us a very good signal. It gave us two formation of hammer. We will buy. Our stop loss is still below, and then we are expecting it to take this high, and it plays out successfully. You can see how it works. Then we'll now adjust it to our new high, and then to this particular high here. Okay, and after that you see that the market moves now and then begins to pull back. After this 23.6, we now confirm that this is a retracement. And from that retracement, this one got to the level of 78.6. We say once it's below 50, we begin to look for entry signal. And this one comes all the way to 78.6. It gives us that rejection. And then here it plays out safely. So these things is pretty simple. Okay, all you need to do first is identify the structure of the market in which you are trading. Okay, here is another level that plays to this upside. Here you identify that the market comes to this structural level, it pulls down. You can see it pulls down here, give us a rejection. This one pulls all the way to 100%. But give us a hammer. If you make your entry here, you see it went up, came down again, and then went back all the way up with this candlestick signal and formation. So your retracement begins whenever the market makes a pullback and the candle closes below 23.6. that is your first confirmation that the market is making a retracement or a corrective move. And then once it has gone below 50%, because we want to buy low and sell high, which means our discount zone started from 50%, they will begin to look for opportunity to make an entry, because we are looking forward to having a tight stop loss. Okay, then our profit margin will be very high. So that is how to use this tool. In an uptrend, you fib from your structural point, the higher low, to the higher high. Okay, that is how we fib it. This structural point is what I've marked out here. Just as I've said earlier, for you to identify this, you must be conversant with the knowledge of the market structure. And if you don't know what the structure is all about, I recommend that you watch our previous video so that you can be able to identify a market structure. I believe you are getting value from this video. And if you are getting value from this video, please like, subscribe to the channel. Don't forget to turn on your notification bell and also share this video with your loved ones. I want to show with you briefly the setting for this Fibonacci. Okay, here is our Fibonacci setting. Okay, you see it. It is 0. Here is our setting. We have the 0 level. Okay, let me bring it up for you again. Okay, let's take it back. Okay, here is our Fibonacci, and here is the setting for our Fibonacci level. Okay, you come to level, click on it, then you can see the level. We have 0.00, 0.026. You can take the screenshot of this and then do the setting on your own. If your own is not showing, I know of course your own will not be showing 0.86. Okay, so I want to delete it so that I can add it for you to see. All right, here is a default setup. What you are seeing now, the Fibonacci is in a default mode. So you click on this plus sign at the top for you to add. Then you click here, you edit. You can put 0.786. Then in your description, you put 78.6. Then you click on the plus again to add another one, which is 0.886. Then in your description, you add 88.6. And then when you are done with that, you click on done, and then you will increase the pixels so that it can be bold enough to see. Then you go back and click on done, and this is what we are having here as our Fibonacci. So please do not forget to like, subscribe, and share with your loved ones. In the next video, I'll be sharing with you Fibonacci strategy, how to make entries in details using the Fibonacci. Cheers and God bless.